Okay, so here what we want to look at is we want to look at fair value gaps. Now I'll start by defining what fair value gaps are. Fair value gaps. So fair value gaps simply are inefficiencies or imbalances formed in the market. So whenever you have inefficiencies inefficiencies or imbalances, let's see. Seems not right. Or if you have imbalances. Now, what imbalances are? It just simply means these are just points where you have the buyers and sellers not being equal. This is an important concept to understand. The reason is simple. Because if a market is moving, let's say in an uptrend, then if the buyers and sellers are not equal, it means that the market will move very fast. You see, it will have like an impulsive move like this one. Then maybe with a very small retracement, then it continues to the upside. Now, why is this important? Because here you can see a balance in the move where we see that every after an impulsive move, the sellers are stepping in to push the market down, then it continues. This is also called, this is a healthy trend that now this rapid move to the upside is not a healthy move, hence not sustainable, meaning this will eventually have to come down to fill this inefficiency or imbalance that it has formed. You can see the market moved way too fast. So now let me just show you what the fair value gap is, so that as we are talking about it, you can have a mental picture in mind. So essentially, a fair value gap deals with two candles. Let's say you have let me just change the setting for this. Settings, style, extend, let's move that. And then change the colors as well. Let's make this one green. The background. Here. We have this candle here, right? Let's say we have this candle. Then we have another smaller candle here. Then we can have a red candle from that top. I'll just change the background to red. Yeah. So if these are three candles, that means this point here, see this point from where this candle starts, let me just do this, let me use this. That point from where that candle starts all the way to where this other smaller candle, where it opened and closed. So it's somewhere around here. So this area, now let me just choose this. On this bigger candle here is now what forms the fair value gap. This, in other words, is now the fair value gap. Because the market, from this red candle, it moved with an impulsive move, creating an inefficiency because it didn't, these two didn't close out each other. Either a week from this candle didn't reach a level where also this other week had reached. So this automatically creates an imbalance. Now, let's just look at this with an actual example of the market. So you can see from where that you can actually spot. You can see here from these smaller candles here all the way to this level here. That level there. You can see that this point here creates an imbalance or an inefficiency. So what the market will try to do is it will try to come back. What am I doing? I'm supposed to use this. So let me just go back to my initial colors I had creating. And then this was dark gray, then let me extend that. You can see right, the market had created some kind of an efficiency in this area here. So what we expect is the market has to push back to that level before it actually continues going down. So you can see, we can actually see that the market pushed from this level, tried to go back into that inefficiency, pushed back again before it actually dropped. What's this? Let me remove everything. So that's what fair value gaps are. Another example would be, so fair value gaps can be found everywhere. Then I'll explain how you can actually make use of these fair value gaps. You can see here, right? You had this. I'm looking at the wick for this smaller candle here. Then we want to see what the next candle does. That. So we see that the market actually went in this level, that fair value gap, before it actually pushed to the downside, this downwards move. So key things to remember before I even continue here. Key things to remember here are: one, a trending market. So the first thing is you need a trending market. Two, you need the momentum candle. So you need a momentum candle to kind of solidify the fact that there is a lot of inefficiency. Then, obviously, in order for you to form a fair value gap, you need three candles. All right, that you need at least three candles. Need three candles. So you need these three things. Now, what I just mean here, real quick, let me show you. So I'll change these settings. Let me just remove the extension. Okay. So if this is a candle, right? We change the background to green. If this is a candle, you have that as a candle. I'll explain all the three things that I've talked about. And this is another candle. Let's just imagine this one is a red candle. The next one, let's see, another red candle. So now what I was saying is this. What you need to identify in order to come up with, in order for this to qualify to form a fair value gap, is you need at least three candles. You see, these are 1, 2, 3. Now these three candles, you need to ensure that the wicks, let's assume if this one at the wick extends maybe up to there. So this has wicks. Then we look at wicks also for this other candle. There's a wick maybe two there. So the inefficiency here is from where this candle left off, that point, to this level here, to that level there. This is the inefficiency or imbalance that has been formed. This is also known as the fair value gap. Now, the market will always try to come back and fill this inefficiency before continuing in a particular trend. So that's why I was saying you need at least three candles. You can see these are three candles. Next, you need to identify the trend. What trend are you in? Are you in an uptrend or in a downtrend? Remember, the inefficiency or fair value gap is going to act as your support or resistance, depending on the direction to which the market is going. Then the last thing I talked about was the momentum candle. So this has to be a momentum candle because the bigger this, the merrier it is. So now let's get rid of all this. Hope that makes sense. Let's get rid of that. Now let's try to identify fair value gap. You can see that fair value gaps can be identified all over this market. What I just need to do is identify the trend. Do we have any trend here? Yes. We're moving to the downside. So I've just seen that this market is going to the downside. What's the next thing I'll wait for? I'll wait for three candles. You can see that these are more than three candles. But you want to wait for the three candles after you identify the momentum candle. The momentum candle is simply a candle that's very unusual, like it's big like that. All the way like we had these small candles here, then all of a sudden we had this momentum candle here. So now what I want to do is I want to ensure that I mark out the levels where this previous candle, this small candle, where it left off, that point there. Then this other candle on the opposite side, where it left off, that level there. Then you can see that the market came back to this level here, the inefficiency that created, then continued to the downside. So after the market breaks to this level, you want to enter your trade targeting a level that's at least the same distance as this to that level there. So you want to have something like that. Just understanding fair value gaps alone, you can make trading so much easier. We can come to this level here. You just want to see, for instance, let me show you something. You can see that this momentum candle here, that one, it did not create any inefficiencies because the wick from this other side and the wick from this previous candle here, they crossed. So this did not form any inefficiencies. But then immediately when we see this other one here, this big black candle, it has formed an inefficiency. How do I know? Because if I put a line on this previous candle and then the very next subsequent candle there, you see that the market went back to that level filled it, and then started going to the downside. Now you see this everywhere. So key pointers are, first you need to identify a trend. Once you have the trend, identify the momentum candle, then trade if the market goes back to your fair value gap. So you can see even this here, there was an inefficiency. We at this level here. You see that the market will definitely try and go back to that level to fill in the inefficiency. It actually broke past this level here, which of course happens in the market. So this could have been a failed trade. So we see the market breaking past this level. By the way, as I said earlier, the fair value gap can act both as a support. You can see here it was acting as a support and resistance as well. So you can identify fair value gaps almost everywhere. So you can see there's an inefficiency that formed right in this level. You can see this is a momentum candle. I've identified that. The next thing I want to identify is the trend. You know that this is an uptrend. So then what do? We just wait for the market to come fill this fair value gap. Then let me just go back to settings. I extend this to the right. Same, right? The market comes back to fill this inefficiency, then continues going back up. So then the next thing you want to really know about fair value gaps is just practice. Practice them, go on any chart, practice fair value gaps, how to identify them. Once you do, it will make your trading so much easier. Don't forget to like and share, subscribe. I'll see you in the next one.